Welcome back to Microsoft Sphere. Get ready, because we're diving headfirst into the biggest tech stories of the day. First up, Adobe is absolutely crushing it with record-breaking Q3 revenue, fueled by a massive AI surge that's already blowing past targets. Then, we've got a lightning round of stock market movers, featuring Adobe, RH, and Super Microcomputer, showing us who's up and who's down after hours. Next, we're getting the inside scoop on why Adobe's Q3 performance is so strong and how they're raising their outlook, with CEO Shantanu Narayan sharing the vision. And finally, we'll break down how Adobe is raising its FY25 targets after a record-breaking quarter, with insights straight from their CFO, Dan Durn. Don't miss a second. Hit that subscribe button and ring the notification bell. Adobe just shattered expectations with record Q3 revenue. This isn't just any earnings report. It's a testament to Adobe's powerful pivot towards AI, with AI-influenced annual recurring revenue soaring past $5 billion and AI-first product ARR exceeding targets a full quarter early. This surge in AI integration is reshaping their entire product suite and driving significant growth across the board. Key highlights include Adobe's AI-first offerings like Firefly and Acrobat AI Assistant, which are rapidly gaining traction. Generative AI usage is through the roof, with a staggering 29 billion generations and nearly 40% quarter-over-quarter growth in video generations. This deep integration of AI into core workflows is not only enhancing creative productivity, but also strengthening Adobe's platform stickiness against competitors. The company also saw robust growth in its digital experience segment, with significant increases in ARR and a rise in cross-cloud deals. Wall Street and the tech community are buzzing about Adobe's strategic AI investments paying off. Investors are particularly impressed by the company's ability to monetize AI capabilities effectively, leading to raised full-year revenue and EPS guidance. This performance solidifies Adobe's position as a leader in the AI-driven creative and digital experience landscape. Don't go anywhere, we've got more massive tech news coming your way. Next, we'll dive into the stock market's after-hours action, dissecting the biggest movers like Adobe, RH, and Super Microcomputer. After-hours trading is heating up, and some major players are making waves. We're zeroing in on the key companies whose stocks are making the biggest moves once the market closes, including tech giants like Adobe, furniture retailer RH, and the ever-innovative Super Microcomputer. This is your essential rundown of who's surging and who's stumbling in the post-market session. Get the inside track on the specific factors driving these after-hours fluctuations. Whether it's a stellar earnings report, a strategic partnership, or market speculation, we'll break down the news impacting these companies. Understanding these after-hours movements can offer crucial insights into market sentiment and potential trends for the next trading day. Industry analysts and financial commentators are already weighing in on the implications of these stock shifts, with particular attention on how these companies are navigating the current economic climate and their respective competitive landscapes. Stick around, because the tech news doesn't stop here. We're shifting gears to uncover the detailed story behind Adobe's impressive Q3 earnings and their boosted financial outlook. Adobe just delivered a Q3 earnings report that has the financial world talking, and they're not just meeting expectations, they're exceeding them. Adobe announced better-than-expected third-quarter earnings and significantly raised its outlook for the remainder of the fiscal year. This strong performance is largely attributed to their aggressive integration of artificial intelligence across their product lines, a strategy championed by CEO Shantanu Narayan. CEO Shantanu Narayan highlighted that AI represents a tectonic technology shift and presents the biggest opportunity for Adobe in decades. He emphasized the company's focus on infusing AI across their leading applications and launching innovative AI-first products. Key metrics show AI-influenced annual recurring revenue surpassing $5 billion, with AI-first ARR exceeding $250 million for the full year, achieved ahead of schedule. This success is driving robust subscription growth in both the digital media and digital experience segments, with total revenue climbing 11% year-over-year to $5.99 billion. Even with new AI agent capabilities recently launched, the company is projecting strong fourth-quarter revenue and raised its full-year fiscal 2025 targets. The market reaction has been overwhelmingly positive, with analysts pointing to Adobe's successful AI strategy as a major differentiator. Investors are keen to see how these new AI agents, powered by the Adobe Experience platform, will further enhance customer experience and drive future growth, especially as Adobe faces increased competition. But the Adobe story doesn't end there. We've got even more details on their financial performance. Next up, we'll unpack the specifics of how Adobe is raising its FY25 targets and what that means for their revenue and EPS outlook. Adobe is not just hitting targets, they're raising the bar. The company has announced record Q3 revenue and is significantly boosting its financial outlook for fiscal year 2025. This upward revision in targets comes after a stellar third quarter, where Adobe reported record revenue and saw its remaining performance obligations, RPO, surpass $20 billion, demonstrating strong forward momentum. The company's strategic focus on AI innovation and effective go-to-market execution are cited as the primary drivers behind this optimistic forecast. CEO Shantanu Narayan proudly stated that Adobe is the leader in the AI creative applications category, with AI-influenced ARR surpassing $5 billion and AI-first ARR already exceeding our $250 million year-end target. CFO Dan Durn further elaborated that the company is raising its FY25 total revenue and EPS targets due to strength in subscription revenue across both digital media and digital experience segments. Specifically, Adobe has raised its FY25 total revenue guidance to between $23.65 billion and $23.7 billion, and its non-GAAP EPS target to $80.85. For the fourth quarter, total revenue is projected to be between $6.075 billion and $6.125 billion. This news has been met with widespread approval from investors and analysts, who view Adobe's aggressive AI strategy and consistent financial performance as strong indicators of future success. The company's ability to consistently deliver and exceed expectations solidifies its market leadership and growth potential. That's all the in-depth news for today, but stick around for a quick recap. We'll be right back after this to summarize the biggest stories and tell you how to stay connected. And that wraps up another packed episode of Microsoft Sphere. We saw Adobe absolutely dominate Q3 with record revenue and a massive AI push, shaking up the stock market with their performance. We also gave you the rundown on the biggest after-hours stock movers, including Adobe, RH, and Super Microcomputer. Plus, we dug deep into Adobe's strong Q3 results and how CEO Shantanu Narayan is steering the ship with AI innovation. Finally, we broke down how Adobe is raising its FY25 targets thanks to incredible growth. If you haven't already, smash that like button, subscribe to Microsoft Sphere for all your essential tech news, hit the notification bell so you never miss an update, and let us know your thoughts in the comments below. Follow us on all social platforms to stay in the loop. We'll see you next time.